All right, good evening, everybody. It is June 13th, 2022, 9 o'clock at night, and wow, the markets are off to a horrendous start for the week. But you know what? Instead of talking about the equity market, what's very interesting to me is the action in the bond market. And oftentimes on the stream and in the Behind the Street newsletter that we write all the time, we'll often talk about how the action in the bond market is more important than looking at the stock market. So the yields on the US 2-year have gone to Mars. The yields on the US 10-year has gone to Mars. And this is almost signaling an uncontrolled sell-off in the debt market. So we'll talk about that tonight. As of recording this, I believe the yield on the 10-year U.S. Treasury is about 3.375%. If we look at the 2-year Treasury yield, I believe that's 3.4%. And if we look all the way down the curve, the 30-year is 3.356%. So we essentially have a flat to negative yield curve across the board. But the thing that's most concerning to me is the velocity and just how quickly rates got there. So if you guys are following me on Twitter, at Walks Wall Street, I've been posting some of the charts of the US 2-year, of the US 10-year, and the 30-year on my Twitter feed. And you could really see, if you zoom out to a monthly time frame, just the sheer force of how fast those yields got there. So if we understand the bond market, we understand that yields move inverse to price. Price moves inverse to yields, vice versa, right? So that means there is a huge selling and an implosion in the debt market. Now, aside from that, another thing that I've noticed that of interest, or that's really interesting, I think everybody should be paying attention to, is the relative strength of the US dollar. So check out the Dixie, or the dollar index. We just broke out over new record highs from December of 2016. So Dixie, the dollar index, is about 105. I think it's very possible we go to 120. Now, the reason why 120 on the dollar index or the Dixie is very important, because that was the top in 2002, I believe, when the dollar went into decline all the way down to the lows of the 2008 financial crisis, when we went to about 71. So what does this mean to emerging market currencies? You could imagine, must be getting destroyed. I think the number one thing, or I should say number two, currency that we need to be keeping our eye on is the Japanese yen. I mean, if you want to talk about currency crisis potentially, I think Japan could be in for, or the first developed nation to be headed towards some sort of currency crisis where the people of Japan lose faith in their currency. And we'll talk about why this is, right? You know, oftentimes on the stream, we'll talk about the Federal Reserve, which is the central bank here for the United States, but this would be the European Central Bank. We've been talking about the Bank of Japan, and one of the things about the Bank of Japan that is in stark contrast in relation to the rest of the world, and then I'll see who else we have in the chat here. But the policy that the Bank of Japan has adopted is in such stark contrast to the rest of the world, starting to lose faith in the Japanese currency. So as we've been talking about, the Federal Reserve, or Jerome Powell, has started to raise interest rates. We are going to hear from the Fed when the FOMC meeting concludes. The Fed is definitely going to raise interest rates at about 50 basis points. There's about a 92% right now, a 75 basis point rate hike. But that is in stark contrast to what they're doing in Japan. Japan is still easing. Japan is still printing money. And I think the markets are signaling, hey, inflation is not only ramping in the United States, but inflation's a lot worse around the world. So I think the market around fiscal and monetary policies but the markets got hit and got hit hard. So we'll talk about a possible liquidity crisis. Well, I think we're in the early stages of a liquidity crisis now. What that means for equity markets going forward, and why it's so important that we need to follow sound sell rules, right? So on this channel, we always talk about, How to Make Money in Stocks by William J. O'Neill, the founder of Investors Business Daily. If you follow his sound rules, it'll keep you out of every single stock market decline. And over the past couple weeks, we've been really talking about how a lot of this Robin Hood mentality and the meme traders, the buy the dip no matter what, that's not going to work all the time. And I think ever since the 2020 lows of COVID, when everybody was forced to stay home and nobody had anything to do all day but trade stocks, they've essentially developed very poor investing and trading habits. And I think that's all coming to roost right now. Just last week, I think there was an $11 billion inflow into U.S. equities. That tells me that the pain, or max pain, is definitely not here quite just yet. So I think it's important to stay away from all the buy the dippers, because whenever you just buy the dip aimlessly, that's how you can get caught in a severe downturn. Look at all the meme stocks right now. Look at all the very high beta growth stocks. Look at the stocks like Peloton. I mean, if you guys remember 8 months ago on the streams, the chat was filled with people asking about Peloton. Should I buy it? Should I buy it? The answer is obviously no, but that stock model on the backs of the financial illiterate, taking advantage and trying to turn the stock market into a casino. And I think a lot of those people who are new to investing, new to the stock market, are starting to understand that the buy the dip mentality doesn't work all the time. You have to understand monetary and fiscal policy. You have to understand what the Federal Reserve is doing. You have to get back to the basis and understand fundamentals of the company, right? It's not only about price to sales ratios, it's about actual earnings and EBITDA. So we'll cover that today, but I just wanted to briefly go over that before we started the stream, because the bond market is the number one place we need to look, and today was an absolute meltdown in the bond market. But everybody, let's see who we have in the chat. Happy Monday to everybody. Hey, we have Mr. Ming is here, Sally is here, welcome. Thomas is here, says what's up. Roy S. Michelle K is here, says hey Tom, how are you? I'm doing really good. I'm doing better now that we are outside of the Seagram building, which is my favorite building in New York City. It's beautiful here. Fred X is here, Soho guy, welcome Soho. Hey, Solo401 says the best channel on YouTube. Thank you so much, Solo401. Always a pleasure to have you here. We have Western Mass Dave, welcome Western Mass Dave. Lena Sandoval is here. We got a full house, everybody, on this Monday night. Beautiful day in New York City, by the way, beautiful night. The sun is setting here. We are overlooking 432 Park Avenue, right up there on Billionaires Row. So we'll be walking up to 59th Street, Central Park South, and then heading down, back down Park Avenue to Moynihan train station. Hey, XOXO Bob is here, Hal T16, welcome. NMB045 says, so if stocks and bonds are both shedding, where are people investing? Well, I think we could look to the relative strength in the dollar, right, in the Dixie. I think you're having a massive liquidity crunch, a massive liquidity crisis, because after that CPI print that we got last week, so I'll take a step back. I think the Fed has to make a decision. What's worse, declining asset prices or inflation? Okay, I know what I think is worse. I think inflation is a lot worse for this country than declining asset prices, and I'll sort of explain why, and I think that'll answer your question. And it's obviously up for debate. But what is the median income in America? Is it like $67,000 or something like that? 67,000. If we understand that, so the average guy, average girl in America is making 67 grand to feed their family, to support their family, pay for gas, pay for groceries, pay for rent. And if it's going to cost them roughly $6,000 a year just to put gas in their car, that's when you have, I mean, not to sound super, crazy and like an Armageddon type person, but that's just not doable. The numbers don't work. I won't sort of go into the analogy I was going to say, but the numbers just don't work. If you have the average guy or girl in America making $67,000 a year, they're paying $2,000 for rent. It costs them $6,000 a year just to put fuel in their car. There comes a breaking point, which we've talked about before. So societies won't work like that. So I think the Federal Reserve is going to have to make a tough choice here and say, okay, it's either number one, we get inflation under control back to our 2% target. And if we don't do that, I mean, they're going to have to raise interest rates. So the futures market is pricing in about a 92% probability on Wednesday of a 75 basis point rate hike, which I think the Federal Reserve should do. I think they need to get a little bit more aggressive, but I think they're going to have to, sacrifice the equity market, potentially the housing market here to get inflation under control, or else people literally won't be able to function and live, and it's going to get really, really ugly. So going back to your original question, where are people going? Well, look at the dollar index. The Dixie hit 105. We broke the highs over the 2016 highs. Very possible we go all the way back up to where we were in 2002, which was like 120. And if you sort of put this picture together, look at all the other global currencies out there. Is anybody watching what's happening in Japan? I mean, the yen is just falling off a cliff. And I think the market is being very clear here. They're saying we need to focus on inflation and get inflation under control. And what is the Bank of Japan doing? Right, they're actually still easing. So as the European Central Bank, as the Federal Reserve are tightening or doing quantitative tightening and raising interest rates, the Bank of Japan is actually doing the opposite. And I think that's why their currency is getting absolutely obliterated. So look, I think the Federal Reserve is going to have to make a choice. But I'm confident, I think, which we are going to talk about tonight. I want to ask everybody in the group, do you think the Fed will raise 75 basis points, or do you think they'll stick with the 50 basis points? At this point in time, I think they'll go 75 basis points, in my view. I think they almost have to. I think they're going to be backed up against the wall. Hey, Rock Band 5 million. Good to see you, my friend. Hope you're well. So let's cross the street because I don't want to walk under the scaffolding. Hey, the ABX girl says, Tom, I think they'll do 75 basis points. Walking Minnesota says, I think we'll see 75. Okay, so a lot of people are saying 75. Walking Minnesota says, Tom, I think that was leaked today. So I did see something about that as well. Supposedly the Wall Street Journal leaked that there is going to be a conclusive 75 basis point rate hike. But the futures market is pricing in, I think, a 92% probability of that, which I think is the right thing. And, there was a really nice debate today on CNBC where they came out and said the exact question that I'm asking. What is worse, declining asset prices or inflation? And almost everybody today on CNBC on this particular debate said that inflation is way worse, which I agree with, because the vast majority of Americans, which we've talked about on this stream before, don't hold a lot of assets, right? People are living paycheck to paycheck. People, are making about $67,000 a year. And if you continue to have these CPI prints of 8.7% and higher potentially, maybe even if we get a 10% CPI print, the average American is just not going to be able to do it. They're going to break. So if that means the NASDAQ has to come down 40%, so be it. I think the Federal Reserve Chairman Jerome Powell is going to have to make that decision. Hey, Nicole is here. Says, hey, Tom, good to see you. John Sorley says, I wonder what happened to the guy who passed out under the bike. So I called the EMS and he is fine. Don Smith says Biden is going to Saudi Arabia. Junior says, ciao, Tom. Glad to see you roaming around New York. Go Warriors. Good to see you, Junior. Jewel Mars says, I believe 75 basis points. Jay says 75 basis points for sure. Kirby says, Tom, they need to do 100 basis points. So Kramer was calling for that as well. Eyeglass Lady says, yes on the 75 basis points, too close to the midterm elections. Yeah, and I mean, not to get too political, but I think, it's going to be a lock for the other opposing party. Cindy Foley says, hey, Tom, you are a great American. Thank you. Appreciate that, Cindy. Timothy O'Neill, welcome. Good to see you. So I think one of the last things that I wanted to make a quick note, and we've constantly been talking about this almost ad nauseum on the stream, this is the reason exactly why you ignore all of those buy the dipper crowds, right? So all the people that are like, oh, stocks can only go up, stocks only go up, and buy the meme stocks, buy the AMC, buy all the, like, what's the other one? The GameStop? Yeah, it's the other one. I think that these people, unfortunately, they're novice to the market. They've only come in and traded during 2020 because they were stuck at home. And the only option for them to get exposure to the market was through Robinhood. And Robinhood, I think, through deceptive sales practices, in my view, have coerced these people, an entire generation of people, into essentially gambling, right? Confetti popping around, blowing all over the place. And as you see right now, everything always comes to a head and comes home to roost. And I think these people are just starting to feel the pain right now. So that's why you never just buy something aimlessly, and you do have to have risk management. Just look at the data. Look at all of these sort of very, very high beta stocks that everybody was just valuating on like a price to sales, no earnings, very little earnings, extremely levered. All these things are down 90%. So when I try to get on the stream and try to keep a level head and say, guys, I know it may seem like everybody and their brother's making money in the stock market. It's not sustainable. It's nonsense. So, and we're starting to see it now. This is a big, big unwind, and I think a lot of people are getting slaughtered. Michael says short Bitcoin. Interesting. I actually bought Bitcoin today, but that's not an endorsement for anybody. Hey, Billy says Oracle killed it today. So I didn't even get a chance to go in on Oracle's conference call. I was so busy. But yeah, so Future Endeavor says, did you hear Justin Bieber is paralyzed? I did see that. It's horrible. I feel extremely bad, and I hope he gets well. I really, really hope he gets well. Hey, Out and About is here. Good to see you, Out and About. But yeah, I'll touch on Bitcoin for a second, Michael. So I'm not sure if you follow me on Twitter, at Walks Wall Street, about a couple months ago, I said usually the time to buy Bitcoin is right around the 200-week moving average. And this is when Bitcoin was trading at, I think, like $37,000. I said, I think we're probably going to retrace to the 200-week moving average. And then that is probably when I'll add to my existing stash of Bitcoins. So I actually bought some today. But that is not an endorsement or a recommendation for anybody to do anything. But I just thought it was interesting that Michael brought that up. See, because during those times, like if you saw the volume today, I was watching the volume metrics on like FTX and all that. I mean, talk about absolute thunder. I mean, there was so much liquidation today, it was insane. There was probably so many margin calls, hedge funds blowing up today. It was crazy in the markets. And being that the cryptocurrency market, more specifically into Bitcoin, is so illiquid, it's such an illiquid thing, and the overall cryptocurrency ecosystem is fraught, with, quite frankly, and I know the crypto guys don't like when I say this, but with scams, right? With a lot of those lending protocols saying, oh, if you lend out your stable coin, you can get 8%. All of those Ponzi schemes are starting to unwind. So a lot of the times, people who have exposure to that, when they get those margin calls and they're blowing up, they have to just sell everything. It's called a pan sell-off. So they have to dump their Bitcoin, they have to dump their Microsoft stock, they have to dump S&P 500. They just have to liquidate anything they can just to cover their margin. And that creates opportunities for people who are disciplined, who don't leverage, like me, to re-add to my positions. So it's really, really scary. It's really crazy when all this stuff is going down here. But in my personal opinion, for me, again, this is only what I did. So this is not an endorsement. I just was bringing it up based upon the fact that Michael said short Bitcoin. I actually bought it today. Junior says no such thing as a quick buck. You have to do your research and understand the risks involved in the market and how it works. Resist the FOMO. I agree, Junior. I think it's phenomenal. I think that quote is phenomenal. I agree. Hey, Sky is here. Says, hey, Tom and viewers, Mod Squad, good to see you. So this is 432 Park Avenue right here. Beautiful building. Even though we do see some problems with it, heavy litigation. So a lot of the tenants here are in litigation with the developers. But I think it's still a pretty iconic building in the skyline of New York. I really like it. So I'll give you guys one more look of it from all the way at the bottom. Sadiq says, hey Tom, what do you think about Dogecoin? I really don't think about it much. To be totally honest, I really don't think about that stuff too much. Hey, Mario says, hey from Argentina. Good to see you, Mario. Welcome. Don says Celsius. Yeah, so Celsius was another one of those. I want to be very careful with my word choices here, but yeah, one of those DeFi protocols that are coming undone. TMB says, will there be a washout day Wednesday afternoon? You know, I was thinking about that too, but I think if the Federal Reserve does the right thing, I think the markets may respond well. if the Fed does the right thing. So we'll see. We'll definitely see. But here's what I think would be the worst case scenario in my view. I think what would be the worst case scenario if the Federal Reserve tries to come in here and actually save the quote-unquote equity market. So if the Federal Reserve goes back to quantitative easing and not raising interest rates too soon, I think that's going to be seen as a huge negative to the markets, and that could cause like an Armageddon type situation. And the only reason why I say that, I could be wrong, but the only reason why I say that is because the market is essentially doing that same thing right now to the yen. Right? I mean, the Bank of Japan is the only sort of large central bank out there that's not getting aggressive with tightening and raising rates. They're actually doing the opposite. So they're actually still easing during this time. And the currency, the FX markets are throwing a fit over it. So, look, I think if we go back to the basics, like Finance 101, aside from all this Keynesian ideology, you know, recessions are actually normal and they should happen. The issue where we have right now, and where we have gotten ourselves into right now, is that we have had a prolonged period of time of suppression of interest rates and easy money policies. So if you look back, you know, when Alan Greenspan was Fed chair, right? So when he would do interest rate cuts, you know, he was cutting rates when, you know, mortgage, a 30-year fixed was 14%, right? So we had a little bit more room to work with. You know, now we're seeing the equities market start to implode already, and we've raised interest rates twice. We had one 25 basis point rate hike, and then we just got a 50 basis point rate hike, and now we'll probably, as everybody in the chat has said, I think somebody in the chat said there was a leak on the Wall Street Journal, or the Wall Street Journal leaked. There's probably almost 100% going to be a 75 basis point rate hike on Wednesday. and the equities markets are having a fit. So I think there could potentially be a long way to go, but I think we're probably about halfway through the bear market. Because if you remember what we've been talking about on the streams, going back all the way to January, I remember a lot of the streams we were talking about, the equity market, or let's just say the indices. We would say, the indices are trading at all-time record highs, but let's look under the hood of the market. Do you guys remember we always used to use that term, let's look under the hood here? I said it's weird. Apple's trading at all-time record highs. Microsoft is trading at all-time record highs. All of the mega cap tech stocks were trading at all-time record highs, but if you looked under the hood of the market, you saw all the special purpose acquisition companies exploding. You saw all the very high beta tech stocks exploding, multiple compression, multiple contraction. So the market was becoming very, very thin. It was becoming a very, very thin market. And then, the last domino, or as they like to call them, soldiers to fall, are the actual big mega caps. And once they start to roll over, that is when you really start to see the carnage in the indices. So now that is when the average guy or girl starts to pay attention, because a lot of people just look at, what did the Dow do today? Okay, what did the S&P do today? What did the NASDAQ do today? And now that's starting to unwind, but people who've been in tune with the market, actually looking at the overall breadth, right, every single sector, well, we've been talking about, we've been in a severe bear market for probably about 6 months already. Hey, Chris Beeman is here. What's up? Good to see you. Chris is joining us from Arizona. Chris, hopefully it's not too much of a dry heat over there. Good to see you as always. Joan is here. Welcome. Hey, Score123 says hello, everybody. Good to see you, Score123. Hopefully you had a good day today. Who else do we have? Hey, T. Campbell says, hey, Tom, there's the article on the 75 base point rate hike. Thank you for that. Thank you for that. DWG says, did you say 2,100? Maybe you mean 21,000 for Bitcoin with cleaning stuff out. I think we are near a bottom in Bitcoin. I think we are near one. Usually when Bitcoin bottoms, you have these big capitulation events. But then again, you also have to realize the correlation with the NASDAQ. So Bitcoin and all the other cryptocurrencies essentially have the same beta as the NASDAQ, right? If the NASDAQ goes up, so do all the cryptocurrencies. But what I think you're seeing here is some sort of liquidity crisis where essentially everybody's just trying to find a bid. They're selling anything with a bid to raise cash here. But look, we'll hear from the Fed. I think the Fed is the number one driver. So long as there's quantitative tightening, I think you're going to continuously see pressure on the equity market. Somebody, I think it was Taylor, he sent me a really good Stanley Druckenmiller interview. Stanley Druckenmiller is one of the greatest investors of all time. And he's like, historically speaking, when you have the dollar up, right, so the Dixie, when you have the Dixie up, when you have crude oil ramping, simultaneously, and the Federal Reserve in the middle of a hiking cycle, it's almost guaranteed you're going to have some sort of prolonged recession. Which I don't think is necessarily a bad thing. I think this will create immense opportunities. Look at the amazing opportunities that were created from the financial crisis. Hey, Emmanuel says, Tom, 100 basis points on Wednesday. So Emmanuel Kramer's saying that too. A couple other people. I think we'll probably have a 75 basis point rate hike, which I think is needed, by the way. You need to protect the currency at all costs. And I think you're seeing this dollar flight to safety, right? At the very, very beginning of the stream, the first thing I said was, look at the Dixie. It's at 105. The last time the Dixie was at 105 was 2016. I think December 2016 going into 2017. So, I mean, that's the market telling you that out of all the other currencies in the world, they have the most faith in the US dollar. You know, look what they're doing to the Japanese yen, punishing, falling off a cliff, because during this time they're actually easing. They're still doing easing. Don Smith says, hey Tom, any news on Celsius? To be totally honest, I don't really follow any of that stuff. I mean, I think you guys know my stance on it to a T, and it is a very controversial stance, but I think a lot of the altcoins are garbage. I think a lot of them are either outright scams. So I very seldom even follow them. You know, we saw the Terra Luna unwind, and now Celsius is unwinding, but I think it's very predictable that these things would unwind. I mean, if you're promising, if you're marketing to the world, yeah, we're going to give you guaranteed 8% yield. I mean, I think we could just revert back to the number one sound principle of if it sounds too good to be true, it usually is. So I don't even really get involved in any of that, the altcoin junk, to be quite frank. Hey, Samantha R is here. Good to see you, Samantha R. Welcome, welcome. T. Campbell says McDonald's was one of the few companies in the green today. Maybe one to keep an eye on. Yeah, I think it was about a 90% or 99% down day in the S&P, which means almost every single company in the S&P 500 was down. Hey, Western Mass Davis here. Good to see you. Walking in Minnesota, says Tom. 100 basis point would cause even more panic, in my opinion. While I think curbing inflation is more important, we do need to be mindful that would happen. The chat just went crazy. That would happen with a larger than expected hike. Yeah, I mean, look, at the end of the day, the Fed, like you said, is going to have to make a choice. And if I were Fed Chair Jerome Powell, I would say, look, I would telegraph it to the market. I'd say, look, asset prices are going to need to suffer here because we can't turn into, you know, some of these other countries across the globe where inflation is printing at 50%. Okay, it's just not a reality. We can't let that happen because that would really hurt people on the ground. Right, we've always talked about the statistic, and I'm paraphrasing here, but I think it's something like the top 1% or the top 10% of Americans own about 90% of all stocks and assets. So it's sort of like inflation is not really hurting people with a net worth of over $5 million. I think if you have a net worth of over $5 million, inflation's not really going to hurt you, to be quite honestly. You probably won't even notice it. But who it is going to hurt is the average person, like the average person who is going to have to spend $6,000 a year just to fill up their car with gas. And I think as a country, we should be worried about the majority of people and say, look, if that means asset prices, the S&P needs to come down 50%, so we could get inflation back to that 2% target, which is a normal level, then I think we should do that. But that's just my view. Hey, Shannon is here. It says 87 now, and it's 87 in Central Illinois. So Shannon, one of my good buddies I was just on the phone with, he's a hedge fund manager in Chicago. Supposedly you guys are getting a tornado now, are you? And if that's the case, please stay safe. Please stay safe. Please. Hey, MBA Elias is here. Says, hello, Tom. Good Monday evening. Hey, Elias, good to see you. What if the Fed surprises and does nothing? Oh my God. I think the market would be limit down if the Fed does nothing. I don't think they're going to do nothing. I also think from like a national security standpoint, the Fed has to do things. Because right now the market is signaling that the world is looking to the dollar for safety. I mean, that's just a fact based upon the movement in the FX markets. They're not, piling into the Japanese yen. I mean, the yen is falling off a cliff. I think potentially the yen may be the first established, like first world currency to have their citizens lose faith. But look, I mean, the Japanese does things a lot differently. I mean, at a time, we're going to hear from the ECB this week. So I know we like to talk about the Federal Reserve, but we gotta also zoom out to global macro picture as well. Central banks around the world are starting to tighten and raise interest rates, but the anomaly here has been the Japanese, where they're still easing, which is it's beyond me. And I think you're starting to see it in the currency. So I think at all costs, even Biden is probably whispering in Fed Chair Jerome Powell's ear, saying, look, you got to get this inflation thing under control, while simultaneously protecting the integrity of the US dollar. I mean, that's number one. And look, I think this is a good, I'm not going to say good scenario, but I don't really know any other way to phrase it. Because on the channel, we always talk about like the same thing. It's almost the same stream every night. We talk about Stanley Druckenmiller. We talk about Paul Tudor Jones. And what do these people say? They say the same thing over and over again. And literally, they're like, look, you watch the Federal Reserve, you sell into quantitative tightening cycles, and then you buy during quantitative easing cycles, right? So ever since the lows of 2008, we've essentially had this, we've essentially had this managed market, right? Where equities have been on a one-way ticket higher, and anytime we've had some sort of meaningful correction, let's talk about the years between 2014 and 2015, when the S&P 500 was in a little bit of a range, the taper tantrum, if you will. 2018, does anybody remember the big stock market sell-off of 2018? I do. I mean, the market put in a bottom on Christmas Eve. And then what happened? The Fed started printing more money, expanding the balance sheet. So it's almost like the Fed has conditioned investors to say, anytime the market falls under a little bit of pressure, I'm just going to buy it because I know the Fed is going to step in here and save the market. But it's different this time. And I know that's the famous last words on Wall Street, is it's different this time. But does anybody know why this time is different? Well, the reason why it's different this time is because inflation is ramping, okay? It was like the perfect storm. We printed trillions and trillions of dollars. COVID-19 destroyed global supply chains. We have a supply chain crisis. We have a global semiconductor shortage. So now it's very difficult for the Fed to keep expanding their balance sheet and keeping interest rates suppressed, because they're like, hey, in 2018, we were actually hoping for 2% inflation, right? The Fed's target for inflation was 2%, and we could barely get there. But now it's just going gangbusters. So now we are at this point where we're between a rock and a hard place. And I believe it was Taylor. I got to go back in my IG DMs. He sent me that Stanley Druckenmiller interview, and he essentially explained just that, right? That it's going to be hard for the Fed to backstop this market because now we have an inflation problem, and inflation is unacceptable, especially for the average everyday working American like you, me, and a lot of people in the chat. Hey, Jamie C4132. Hey, I love the profile picture. So they don't have many more tools in the tool chest. Yeah, it's going to be interesting. Shannon says, gave billions to Ukraine. Hey, Lady O is here. Good to see you, Lady O, as always. Hopefully you're well. We're actually standing right outside of the Park Lane Hotel. So if anybody comes to New York City, this is actually a very nice hotel to stay at, and I'll tell you why. So 2 years ago, I stayed here before the remodel. I believe they closed due to the COVID-19 pandemic, and while they were closed, they did a complete and total renovation and a remodel of the hotel. So if you want to stay at a really nice hotel on 59th Street, Central Park South,
I would recommend this one, and it's brand new, and I think all the rooms are redone as well. Hey, Sky says, hey Tom, the VIX is at 34 today. Yeah, the VIX was at 34, you're right. Emmanuel says, Tom, the Fed has ran out of bullets. So I want to touch on what Sky Matu said. So Sky Matu says the VIX is at 34 today. Okay, this is my other concern for the market. So I'm not sure if you guys got the Behind the Street newsletter. If you haven't, please check your email and in your spam folders, because oftentimes when I send it out, it can go to your spam folder. So here are 2 reasons why I don't believe the market has bottomed yet. So number 1, the VIX is at 34. Is that a historically elevated level for the VIX, which is the CBOE volatility index, or the fear index, you could call it? Historically, that is elevated, but if you've noticed the VIX price action around major market bottoms, usually we have an absolute explosion in the VIX to 60 or sometimes even 80, like during the great financial crisis. I think the VIX got up to like 79. I think during the COVID crisis, the VIX got up to, I think almost 80. You guys can correct me if I'm wrong if you want to just quickly pull that up. But you're seeing massive complacency in financial markets right now. The VIX is at 34 and the NASDAQ is 30% off the highs. I mean, what is it going to take for this VIX to spike into the 80s or into the high 70s? Number 2 point. The number 2 reason why I do not think that this market is bottomed yet, and the theme or the thematic, I guess you could say, theme of the Behind the Street newsletter that I wrote this week was I think we're going to get a third leg down, and then we just cracked the lows and we are getting that third leg down right now, is the put to call ratio. Okay, the put to call ratio is normal. I believe in March of 2020, the put to call ratio went to 3. Okay, it went to Mars, and that is the sort of action you want to see around market bottoms. So essentially the put to call ratio measures the amount of people betting against the market to the amount of people betting for the market to rise, right? So for those of you who don't know what puts or calls are, in the derivatives market, a call contract, so let's say if you buy one call contract on the S&P, that gives you the right but not the obligation to purchase 100 shares of the S&P or of the underlying security at a specific price at a certain date. Okay, so it's a derivative. It is a contract that gives you the right but not the obligation to do something. It's the same thing with the put. So the put, a put contract gives you the right but not the obligation to sell 100 shares of that underlying security. Does that make sense? So it's a derivative product because it gets its value based upon an underlying asset. It's derivative. And the put to call ratio is showing complacency. So I think we have a little bit more pain to go in this stock market, which may take us all the way to the 200-week moving average in the S&P. Hey, Lee is here, says Tom, I have lived through many recessions, but this one seems fishy to me. So Lee, please expand on that for everybody. I would love to know your thoughts. I would love to know your thoughts on what seems fishy. It seems fishy to me too, but I want to know your thoughts. Hey, King is here, says, hi Tom, you have an excellent voice for a radio talk show voice. Oh, thank you so much. I had a big allergy. I don't know if you guys could tell, but I know you guys know I wear contact lenses, and today the pollen was extremely high in New York. I'm hurting pretty bad right now, let's just say that. Tim Flynn says it's self-inflicted. You know, Tim, that's a good comment as well. That's a number 2 comment of the night. Number 2 comment of the night. Sky Matu says, which one short, the call or the put? So a put, if you buy a put, so if you go long a put, that means you are going short the market, if that makes sense. If you go long a call contract, that means you are going long the market or you want the market to go up. Yeah, Ladios says Claritin helps. You're right, but for some reason, I was taking a walk around Central Park on my lunch break. you could see all the pollen in the air, which has gotten my eyes like crazy. Yeah, Ruby Falcone says, oh no, Tom, allergies are no fun. Yeah, and the weird thing is I get the allergies in my eyes. My eyes go crazy, and it gives me a massive headache. Wendy England says, I just did my 4th COVID test, still negative, so I only have a cold. Well, thank God. I mean, not thank God you have a cold, but thank God it's not COVID. Ryan Royal says, I think this recession will be more drawn out because of the greater wealth gap and dwindling middle class. That's actually a good point. So maybe just to touch or piggyback on what Ryan Royal was saying there for a little bit, and we'll walk, maybe we'll walk to, I'm trying to figure out where we should walk tonight. Maybe we'll walk down the Avenue of the Americas, because we could take a pit stop at the one and only Rockefeller Center, and that is a straighter shot to, it's a straighter shot, I think it's a better shot to Penn Station. So we actually just got some data from the Fed in relation to household debt, okay? So consumer debt reached a new all-time record high, while consumer spending came in relatively strong, right? So the consumer is still spending. But what I don't like to see is the debt accruance here. That may mean that consumers are stressed, and that also may mean that they don't want to spend more necessarily, but they are being forced to spend more because the regular goods and services that they already consume, the prices are going up due to inflation. So in order to make ends meet, in order to put food on the table, in order to put gas in your tank, they are dipping and running up that balance on the credit cards, in which case they are making the minimum payments, but here's the double whammy. And again, this is all speculation. We're just trying to put the pieces together here. We're just trying to talk through it as a team on the chat. Here's where it can get a little bit fishy. What is the Federal Reserve doing? The Federal Reserve is raising interest rates. So what does that mean? The average household's highest, let's say most expensive debt is credit cards. If you look at a yield or the interest rate on a credit card, it's probably like 18%? I mean, maybe somebody in the chat can help me out here. What do you guys think? The average yield or average interest rate on a credit card, maybe 18 to 25%? That's expensive, right? It's not like a 30-year fixed rate mortgage, which now is, I think it's over 6% now, but you get the picture, right? So as those interest rates are going up, also the consumer's minimum payments are going up. So there needs to be an inflection point somewhere. We just don't know when that will be. Last thing I'll say in relation to that, if you go to my Twitter page, I retweeted this account that is so good. You guys have to follow him. I forget the name, but he reposted the Bank of America consumer credit reports, where a lot of analysts at Bank of America does an extremely thorough and detailed job analyzing the checking accounts, the savings accounts, and the credit card data of a lot of their clients. And you got to read this report. So if you follow Walks Wall Street, look at the tweet. I think it's the second to last tweet that I tweeted of the night. That's, you got to follow this guy. He posts very insightful tweets. It's this guy based out of London. I think he's an old school stock analyst that's retired, but he posts amazing work. I was going to program it into the Nightbot, but to be honest, I was too lazy to do it. I just wanted to start streaming. But that is actually showing something a little bit different. It's showing that credit card balances are going up, but the average checking account balance is actually staying flat. So that means that consumers aren't dipping into their checking or savings balance just yet to pay off those debts. So maybe they were just at the time, running it up on the credit card to take advantage of points or whatever. I don't know. I'm just trying to piece it together. But from the Bank of America data, it does show that the average checking account balance and the average savings account balance at Bank of America has not declined, which is a good sign, which is actually a really positive sign. Hey, photos from around New York says Rockefeller Center has rainbow flags around the rink. It looks really nice. Well, we're going to go there. We're definitely going to go there tonight. 1,000%. I want to see that. But I wanted to show you guys Billionaires Row for 1 second. James Brumley says, unless you're a retail worker. Hey, Memory Lane says, be careful, Tom. Dart your eyes in every direction while you're talking to us. Wendy England, good to see you. Vance says, what happened to the guy who passed out in last night's video? I posted an update on the community page. I called the MS and he was fine. Lady Sarita says, hey Tom and everybody, good to see you. Lady Sarita. Van, it's always good to see you. Fred X, welcome. Hey, T. Campbell says 537 million credit cards have been opened up this past year, and spending on cards is up 10%. However, inflation-adjusted spending on credit cards is negative compared to this time last year. T. Campbell, thank you so much for that data point. I think that's an extremely important piece of data that you just dropped there. Really quick, everybody, if I don't get to everybody's comments tonight, I'm going to do my best, but I'm not having a good time with my eyes tonight. Ed C says, don't give credit cards 1 penny of interest. I agree with you, Ed T. I agree. If you have a credit card, you should pay the balance off in full every month. But the reality is not every consumer has that luxury, unfortunately. There's a lot of people hurting. But I agree with you 100%. Hey, Daniel G says, Tom, I miss Wall Street. What about walking it one of these nights? So we may be there tomorrow night. We may be there tomorrow night because, coincidentally enough, I have to be down there near Rector Street. I'm not sure if anybody in the chat knows where Rector Street is, but I will be there right around 5:30 for a meeting. Hey, Victoria's here, says greetings from down under from Melbourne, Australia. Hey, Victoria, good to see you. So we're looking at the beautiful, one of my favorite buildings here, Central Park Tower, magnificent building. And right below it, you see 220 Central Park South, which is the actual building that Ken Griffin from Citadel Securities has an apartment in. And Citadel Securities is a major quantitative research firm on Wall Street, market maker, however you want to call it. So they make markets. They make markets efficient. They provide liquidity, along with other quant firms like 2 Sigma. Oh, it looks like there's a concert getting out. Very cool. So this is Carnegie Hall. So the address is 152 West 57th Street, Carnegie Hall. So along with 2 Sigma, jump trading, all of those quantitative research firms on Wall Street. But Carnegie Hall is one of my favorite places. It's a bummer that there's all scaffolding all over the building. But they are doing a total restoration of Carnegie Hall. But beautiful, magnificent building here. It looks like there was some type of concert or event. It looks really nice. Everybody's dressed up really nice. So I told this story many times, so I won't tell it again. I'll just paraphrase it. During one of the big blackouts in New York City, they were having a concert just like this in Carnegie Hall, and everybody actually came out and finished the concert in the middle of the street. Hey, time lapses. Yes, it looks nice here. Yeah, it's beautiful here. So this is 57th Street, Billionaires Row, at the world famous Carnegie Hall. Beautiful tonight. Hey, Lisa says, hey Tom, just saw Daryl Hall there on April 14th. Is the Russian Tea Room open? I think it is. You know, I've actually never been to the Russian Tea Room, but my uncle used to go there all the time. It's a very famous place. I think many of you in the chat, I think maybe photos from around New York have been there before. Yeah, XOXX Bob's like concert goers, what inflation. Well, you know, Jamie Dimon said the same thing when we covered, this was the first half of the earnings season, right? Obviously financials always go first. And all of the big CEOs of the major banks said we're not seeing a slowdown in consumer spending. We're just seeing a reappropriation of the spending, okay? So when consumers were stuck at home with COVID, everybody was spending on ordering food to the house, spending on Amazon, spending on Netflix subscriptions. So now that consumer is so cooped up that they are now just reappropriating their spending to experiences. They're spending on air travel, they're spending on hotel tickets, concert tickets. So the consumer seems to be very, very resilient, and I think this is a very unique time in America based upon not only the political climate, but the economic climate. And I think the reason why the consumer is so resilient is because they don't really care about busting their budget. They just want to get out. They've been cooped up in the house for 2 years. So they're like, now that the vaccines, everybody's vaccinated, everybody is essentially saying, look, we have to learn to live with this COVID thing. We can have concerts again, we can go out. They want to spend and they want to go out. So I think you make a good point. Okay, everybody, last thing. I'm going to show you Central Park Tower, and then we are going to walk all the way back to where photos from around New York said there's a bunch of, my eyes are killing me. Well, I think there's a pride flag right here, right? All but in front of the Nordstrom building. But we are directly across the street from Central Park Tower. This is one of the most iconic buildings, one of the newest buildings that was just completed here on Billionaires Row. So Central Park Tower, if you shift over here, you'll actually see 157, which is one of the first Billionaires Row buildings. Billionaire Bill Ackman, hedge fund manager that is the founder of Pershing Square, actually bought an apartment in this building. So a lot of notable people on this block here, 57th Street. Zabatatis' Nordstrom is heavily invested in the LED lights. Funny. Abstract Angel Artists says stop believing the fake media. Lady Sarita says I just spent flight money to go to Western Michigan, going to see my parents. I will spend my last. Yeah, I mean, look, I understand, and I've told you guys before. My personal expenditures on flights have gone up 150%. The flights from Miami to New York City and vice versa are up about 150%. I used to spend $50, now I spend $150. Sometimes maybe more. Hey, Gregory is here. Good to see you, Gregory. Welcome. Hopefully you're doing well. Smee Media says there's a roller skating right now at Rockefeller Center. Yes, so this is the first year that when they took down the Winter Village at Rockefeller Center, they actually put up the roller skating rink. Before it was just like a patio, there was outdoor dining, but now it's actually a roller skating rink. Hold on, I want to give you guys one more shot of 157 here. Hey, Mobility Mark says Saylor just got his Bitcoin position liquidated. Did he really? I knew it was close to around this level, but it may be a tad lower than this. I'll have to check when I get off the channel, or when I get off the stream, excuse me. But in summary, those are the main things that I think we should be watching. So for the first hour of the stream, we covered the biggest moves in the bond market. So I've always said, if you want to know where the stock market's going to go, you got to look at the debt market, okay? Because the stock market derives its value from the credit markets. And today, there was an absolute meltdown in the debt market. So I was watching that US 10-year Treasury yield went to Mars. That US 2-year yield also went to Mars. So if we understand that rates and bond prices have an inverse correlation, which means that the price of a bond, when it goes down, means the yields will go up, we can probably conclude that there was a little bit of an uncontrolled sell-off today in the bond market. But we are at the top of the hour, so if you guys want to continue the conversation, if you scan the QR code and you like sort of what we talk about each night on the streams, I do write a free investing newsletter that talks about inflation, that talks about the US equity market, the credit market. We talk about fixed income, we talk about emerging markets, cryptocurrencies, the housing market. Scan the QR code and it will drop the link to my Behind the Street newsletter, where we will write a newsletter every other Tuesday to keep you guys up to date on the market. And it's just a way for us to stay connected a little bit more. So if you want to support the channel in a completely free way, please scan the QR code and sign up for the Behind the Street newsletter. I will send you all of my equity research for free every Tuesday or every other Tuesday. And thank you everybody, because we have about 1,100 people that signed up. So thank you all 1,100 readers. I appreciate you very, very much. So now back to the stream. Hey, yo, Cosmo's Scary, dude. Good to see you. And please check out Cosmo Scary if you want to see some New York City content that is more organized than mine, than these sporadic streams. Please check out our pal Cosmo Scary. He's not only our moderator, but he is a fantastic cinematographer. Please check out his videos; they are fantastic, fantastic. Kirby says, will property taxes and insurance continue to rise? Well, in my experience, my insurance is ridiculous on my property. On my house. Really, really crazy. So on my place, my insurance is about $4,200 a year. Would you believe that? And my taxes are crazy too. Hold on, I gotta cross the street. I can't. And my taxes are crazy too, but I mean, there's not much we could do about taxes, property taxes, be it that. You know, there's two things that are guaranteed in this life. Only two. Number one is death. Death is a guarantee. And number two, taxes. So even though I'm upset about it, there's not much I can do. Hey, Lisa, this is the Uber ride from Connecticut to New York City. 57th was $135 one way. Wow. Well, that's actually not too bad, to be honest. From Connecticut to 57th Street in Manhattan, $135. You know, there were times where my Uber ride from JFK into Manhattan was like $80. So from Connecticut, I think that, you know, based upon that distance, I agree with you, that's a ripoff, but from the price, I mean, it's what it is. I think you're right. It's insane. From Stamford, Connecticut. Hey, Jake from Florida says, I lived in a flood zone. I'm $13K annual between property tax and insurance. Oof, Jake. So Jake, how did you hold up during the tropical storm we just had down there? So I bought my place in flood zone X. So out of all the hurricanes Florida has ever had, I have never flooded once on my block. So I was unscathed, thank God, knock on wood. I gotta find some wood. I'll find it later. Yeah, I wasn't really affected. So the majority of the flooding that happened in southern Florida last week was in downtown Miami, Brickell. Isn't that where most of the flooding happens? Hey, the Thomas Huda family says, hey all, how are you doing today? I'm doing really good. It was a busy day. I mean, between the crazy action in the markets, you know, you'll always hear about the crazy action in the stock market, but today I thought the bond market was crazier. Hey, Cindy Foley says, thank you all and be safe. Thank you for the stream. Appreciate you. Cindy, have a very restful night and we'll see you tomorrow. Jake from Florida says, good man. Wasn't too bad. I'm on the southwest coast. I gotcha. Yeah, it seems like the flooding is always bad in downtown or Brickell. But then again, there's not many actual houses down there. It seems to be all high-rise apartments. So anytime it does flood, really the only place that is affected are like the parking garages, which I guess is good. And the cars. But if you guys are enjoying tonight's stream, feel free to leave a like on the stream and subscribe to the channel if you are new. As we pass the Conrad, which is also another phenomenal hotel. I think there's also residences in here as well. The Essex House, which is on Central Park South, has a hotel and residence, as well as the Plaza Hotel, where we were just at, has hotel on one side and actual condominiums or residences on the other, as well as the Trump International, which is at Columbus Circle. And then lastly, the Mandarin Oriental. Wow, check out here. Beautiful architecture in here. Hey, NMB045 says $50 US trip for my Uber ride between LaGuardia and Bryant Park and vice versa. That's actually not bad. That's a pretty good deal. $50 from LaGuardia to Bryant Park. It's not bad. Kirby says, is the insurance business profitable? I guess it depends on the kind of insurance. You know, we had one stream dedicated to the problems and the issues of a lot of the property insurers pulling out of key markets like California, Arizona, Florida. And why do you think that is? Well, because the natural disasters are getting so crazy. So the California wildfires, you know, it's just the risk to insure these properties is almost just too great now that we have a lot of these wildfires. Same thing in Florida. Well, not with the fires, but the hurricanes and the flooding and all that stuff. So we're definitely seeing a lot of insurers pull out of specific markets, not only because of crazy flooding and things like that, but because of egregious. So I was covering a story in the Wall Street Journal about, this is, by the way, before I finish the story, this is the Hilton Hotel. Classic in here. Beautiful ambiance in here, I guess you could call it. So we were covering a stream how a lot of insurers are pulling out of California because California passed a piece of legislation that states that insurers are not allowed to adjust insurance rates based upon future projections of wildfires. So as we know, due to climate change and other factors, insurance companies have actually been hiring geologists, scientists to pull data and project into the future additional wildfire risk. And based upon those risk projections, your insurance premiums go up. So in order to stop insurance premiums from going up on people, the state of California said, no, you can't do that. You cannot raise somebody's insurance premiums based upon future projections. Into which case I say, well, that doesn't make any sense, because we know that natural disasters are happening more frequently, and not only are they happening more frequently, they're happening with more force due to climate change and other factors, right? Of course I'm going to hire scientists, of course I'm going to hire geologists and meteorologists to say, hey, look at this landscape and build me a model, and get with the finance team and build me a model to say, hey, if I'm going to insure this property, what is going to be the counterparty risk there? I mean, isn't that just normal business procedure? So if I'm not allowed to do that, these insurance companies are like, all right, fine, then I'll pull all the policies. And that's happening in California, that's happening in Florida, and many other places as well that are prone to natural disasters such as wildfires, hurricanes, tornadoes, and the like. If you want to learn more about that, maybe if you guys could look up in the Nightbot archives, it will drop the Wall Street Journal link. But here we are on 6th Avenue. Right in front of us is Radio City Music Hall. Beautiful, beautiful night out. Yeah, Davis's insurance is based on actuaries. The same is true with life insurance. Yeah, but I think you're 100% right, but I think the argument that these insurance companies are making is that if we know that natural disasters are getting progressively worse every single year due to a million factors, climate change and the like, wouldn't we want to hedge ourselves and plan accordingly? Which I think I agree with. Hey, Marcelo Gill says, wow, nice Tom, back in New York City, hope you're well. Hey, Marcelo, I hope you're well too. Marcelo, your daughter I know works at UBS. We're actually about to run right past UBS, so you'll be able to see it. It's always good to see you, Marcelo. Thank you for joining. I appreciate it very much. Yeah, Roy S. is the Halal Guys is right here. So there is a halal spot that's actually better than Halal Guys. And we will pass that. It's called Adele's Famous. Adele's Famous. But we're going to walk around Radio City Music Hall and Rockefeller Center tonight. Hey, Joel is here. Says, hey, Tom, good evening. I'm from Brazil. Good to see you, Joel from Brazil. Sunshine After Rain. Thank you for that Wall Street Journal link. I appreciate it very much. Hey, Junior says the activists fight to protect the forests and leave them untouched, but then they become overgrown and rainfalls turns these places into huge fire hazards. And low rainfall turns them into huge fire hazards. Where is the happy median? Interesting. Wendy England says, if there is no insurance, how will there be mortgages? It's a good question. It's a good question. Who else do we have? Hey, Lady Sarita, good to see you. Says, hey Tom, I believe in a business making money, but I feel that they are outrageous. Yeah, I mean, insurance premiums are outrageous. I agree with you. And look, I admit this is not, I don't think there's an easy answer here. I don't know what the answer is, to be honest, but at the end of the day, I don't think we can ignore the fact that tropical storms, hurricanes, wildfires, tornadoes, they're happening more often and with higher velocity of power. I mean, that's just an undeniable fact. So insurance companies have to hedge accordingly. But here we are for Marcelo outside of UBS. Marcelo says, this avenue is my favorite place in New York. I love the street. The first corner after UBS. So here we are at UBS. Good to see you. David C. Randall says, Tom, they have two options. Number one, increased premiums with higher deductible. Vance says, Mr. Tom, you walk to Paramount Theater? Not tonight. Hey, Wade Braxton says, the vibe is alive. Good to see you, Wade. So speaking of another big money manager on Wall Street, here we have Neuberger Berman, right here. One of my good buddies works here as a risk manager. Kirby says, is there a price that you wouldn't buy property insurance? Well, if you have a mortgage on your house, you need to have insurance. But yeah, I mean, I bought a place in Southern Florida. you'd have to be crazy not to have insurance. Hey, Arthur's here. What's up? Good to see you. Sunshine after rain. Always a pleasure to have you here. Nirvana fan, the guy was good. I called the EMS. Everything was fine. Says that's why California insurance coverage is over for fires. Interesting. All right, so here we are, Radio City Music Hall. We are going to make a left up here, and we are going to go to the one and only Rockefeller Center. You know, so this restaurant just opened. I'm not sure if any of you in the chat have been here yet, but it looks like a beautiful restaurant. This used to be a vacant place, so I'm so happy that it got filled here. Hey, Arthur Harris. This is Popeyes, New Jersey Turnpike, northbound towards Northeastern University in Boston, Massachusetts, and Portland, Maine. Awesome. Tortellini says, if you're a handyman, insurance is a waste. Well, I mean, not if a Category 5 hurricane comes and breathes fire on your house. Bit of Wander, good to see you. Thank you so much for the $1 donation. You are too kind. Thank you, Bit of Wander. I think if you live in, Tortellini, I think if you live in a place that is prone to natural disasters, I think you probably should have insurance, in my opinion. But Bit of Wander, thank you for the support. Yeah, Dave. So Western Mass Dave says, love the outdoor dining setup. I do too. I think they did a really good job. You know, and this place was vacant for so long. You know, on the inside, it almost looks like the place 2 blocks over, which is the steakhouse. I forget the name of it. I always blank on the name of it. But the setup is very similar. It has 2 floors, 2 stories, if you will, on the inside. Hey, Billy says, in Cali, the state is forcing private insurance companies out of the state through regulation while building their own capacity to provide insurance for when the private companies are few and far between. Yeah, Billy, I think you're 100% right. And if you look at the article that Sunshine After Rain put in the chat, it explains exactly that. You're right. You're 100% right. So let's cross here outside of the Radio City. So in other news, everybody, yesterday we were doing the Markets a Look Ahead stream. We did talk briefly about how Oracle, Larry Ellison's company, was going to report earnings today. They did. However, I was so busy today, I did not have time to join that conference call. So please take it amongst yourselves to check out how they performed in terms of earnings per share. But what I'm most interested in is how Oracle guided. What was their guidance? Because we've been seeing a lot of companies on Wall Street, number one, during their financial earnings, not only are they missing on the bottom line, they may be having a slight beat on revenue, but oftentimes they're missing on an EPS basis, and they're actually guiding lower. which is a little bit of a concern. So here's the problem that I see. A lot of the times people will say, hey, the S&P 500 is now trading at 16 times forward PE. Here's the problem. The E could continue to decline, right? The E in that PE could continue to decline as quarters roll out, as consumers get weaker, as businesses get weaker, as interest rates go up, and we fall into recession. So the projection of earnings in that price earnings multiplier could continue to drop, in which case the forward PE could drop even more. But on a historical basis, I will say, just if we just look at the numbers at face value and we don't dig too deep, right now it's not the worst time to buy the S&P in like a retirement account or something like that. If you have like a 20 or 30 year time frame, if you are a hedge fund manager managing money for clients, if you're responsible for other people's money and you have to report a P&L every year, well, you should never buy the dip. You know, we talk about that all the time on the streams. The buy the dippers are going to get absolutely hammered, which they have been getting. You have to deploy risk management. There's not a scenario in the world where you can afford a 50 to 60% drawdown like many of these Robinhood traders are experiencing right now if you manage other people's money, or OPM, right? If you're in charge of running, you know, let's say a $30 billion book, or maybe a $150 million book, right? Depending on the size of your account, and if you're managing clients' money or your family's money, you cannot afford to take a drawdown like that. So wait for the follow-through day and be patient. But here we are at Rockefeller Center. Beautiful day out. We got the spam bots out tonight. Van says, are you close to Palace Theater? I am not sure, Van. Line saying, says, evening Tom and all, hope all is well with you tonight. I'm a tad late, but I brought a note. Very cool. So I think Rockefeller Center may be closed tonight because the police are diverting people around. So maybe they're building something. I think they're putting together some sort of a statue. So maybe we'll walk around. I don't think it's open, but we will see. The wind is picking up a little bit, so the wind noise may get in the mic. Hey, howdy everybody. Or Dave Moore says, howdy everybody. Looks like New York City is definitely coming back, and I love it. Yeah, I agree. I love it too. Hey, Tamara says, hey Tom, thanks for replying to my comments. Well, thank you for being here. Don Smith, good to see you. MB Elias says, if you remember the days when you could get 10% yield on a 1-month CD. Dude, I know. Yeah, so MB Elias, fantastic point there, and I think it's really. So I was okay. I'm not sure which story to start with. I'm getting a little bit too ahead of myself. I have so much to tell you guys every night on the stream. But first, we'll take a look at this because this looks cool. So I was talking to my good buddy who runs a hedge fund out of Chicago, and he told me, he's like, Tom, you got to understand, the average money manager on Wall Street right now, the average money manager on Wall Street has only been running money for about 8 years, 8 to 10 years. And that's a crazy statistic to think about. The average money manager on Wall Street right now has only been running money for about 8 to 10 years. So why is that important? Well, the reason why it's important is because they don't understand how to deal with an elongated bear market, right? Where the market goes down for a year, 2 years. They're so accustomed to any time the market drops 20%, like it did in 2018. Everybody remembers the 2018 stock market sell-off, right? Where we actually bottomed on Christmas Eve. You could pull up a chart of the S&P 500. I think from peak to trough, there was about a 20% drawdown in the S&P. Every time we get a little bit of volatility in the stock market. The Fed comes in here, bottoms interest rates, starts printing a bunch of money, buying mortgage-backed securities, buying US Treasuries. They don't remember, like MBA Elias said, when interest rates, like on a 30-year fixed was 14%. People were buying homes with 14% interest rates on a 30-year fixed, right? They've never experienced that type of market, and the reason why it's so important to take that into consideration now is because inflation is ramping. And if the Fed does not get inflation under control, Americans are going to lose confidence in their currency, and that is not what you want to happen. So it's not like the Federal Reserve can continue to expand the balance sheet and continue to lower interest rates because the CPI is gaining every single month over month. So the Fed is going to be stuck between a rock and a hard place here, in which case the Fed will say, listen, we don't care about your stock market. We have to get inflation under control here because the average American is spending $6,000 a year to fill up their gas tank. Okay, when the average American makes $68,000 a year. It's impossible. It's impossible for this economic system to work in the United States if we have a CPI gaining on 9%. So what the Fed is going to have to do, to MBA Elias's point, is hike interest rates aggressively while at the same time attacking that balance sheet by unwinding mortgage-backed securities, letting treasuries roll off the balance sheet, decreasing the amount of liquidity or the money supply in the market, and that's going to have a big impact on the prices of assets. But I think you're going to have to sacrifice the stock market in the short term to bring inflation back to that 2% target that the Federal Reserve had. And as we've been talking about on the streams almost for probably about 9 months now, inflation was never transitory. Okay, that was the big lie. It's obvious. If you print trillions of dollars, send stimulus checks to everybody, inflation is not going to be transitory. Okay, emerging out of one of the worst pandemics the world has ever seen, when supply chains are totally decimated, inflation is not going to be transitory. It's going to last for a long time. When you have China, when we are so heavily reliant on China for goods and services, for manufacturing, for import-export of semiconductors, when we are so reliant on them, but at the same time, they are deploying zero COVID policies where they're going into more lockdowns, their GDP is falling off a cliff. You have manufacturing literally shutting down in China. We are just starting to open that back up. Inflation is not going to be transitory. So there needs to be something done here, and I think rates are going to go a lot higher. And if we looked at the bond market today, look at the 2-year Treasury yield, look at that 10-year Treasury yield. This stuff is going to Mars. Okay, that means bonds are getting decimated. The bond market is getting murked, and rates are on a one-way higher. So if the Federal Reserve does the right thing, which I think they will do, I think Fed Chair Jerome Powell will do the right thing by raising interest rates 75 basis points and aggressively raising until he gets inflation under control. Once we see inflation start to moderate, fine, then we'll start the QE again. But we can't do that right now. We got to get inflation under control. The Curtis family says, imagine people who plan to retire this year when they look at their 401k and say, now I have to work 5 more years. Yeah, I mean, I think you're right. I think you're right, but trust me, if you do the math, it's better to take a short-term hit in the equity market, if that means for the next 5 years to get inflation under control. You do not want to be living in a world where your rent goes up 10% a year. You don't. Hey, D-Hot. Hat says, where's all the Pride people? Western Mass Dave, good to see you. Says, unfortunately, Tom, you're so right. Don Smith says, being mad at Putin will cost you money. David says, to be honest, it is a learn as play the game situation, if truth be told, the best anyone can do is make an educated guess. Interesting thought. I respect it. Juniors is transitory on a macro level. It will rebound eventually. Maybe. Maybe. I'll respectfully disagree with that. The only reason why I do respectfully disagree, and I could be totally wrong. You could be 100% right. And so that's why I think it's good to share different ideas here. The only reason why I think you could be wrong on that is because let's look at the currency markets. And I know we covered this already on the stream, but I think it's important to cover it again now that we have more people in the chat. The dollar strength is impressive. As we walk down Fifth Avenue here, the Dixie's at 105. And what do we notice about the Japanese yen in particular? Falling off a cliff. And why do you think that is? So I know we talk about the Federal Reserve all the time, but it's not only the Federal Reserve, it's the European central banks. Central banks around the world are starting to adopt more tight monetary policy, raising interest rates, cutting back on bond buying. But the Japanese is an anomaly now because they, while the rest of the world is in quantitative tightening, they're doing the complete opposite and still easing. And the market, from a macro picture, to use your words, from a macro picture, is not liking that. And the reason why we know that they're not liking that is because the yen is getting freaking curb stomped. And it's very possible, and I don't want to be in doom and gloomer. You guys know I'm always optimistic. It's very possible that the yen is the first, I would say, first world established currency that goes into some sort of a contagion effect. Would be like a first domino falling, or goes into a hyperinflationary collapse. And that's the market's way of saying you have to stop with this easy money policy. You have to start to raise interest rates. You can't flood the markets with liquidity or our purchasing power is going to be eroded. And I think that's why you're seeing crazy dollar strength here. And I think it's so funny because think about what the Trump administration did. And I know I could feel everybody's blood boiling when I say the word Trump. Just try to chill out, try to relax. It's Monday night. Let's not get political. But when you have an administration printing trillions of dollars, and then you have the Biden administration come in right after them, print more money, and the rest of the world is like, yeah, we want US dollars. That means that the US dollar is the least worst stable asset to be in right now in terms of currencies. And to me, that is mind-blowing. Because on the streams, we always talk about how, oh my gosh, the US is printing so much money, inflation is ramping out of control, but everybody else around the world is like, oh, we can't get enough US dollars. Very strange. Very, very strange. Yeah, Fantastic Frankie's like, Tom, I need the same printer they're using. Funny. Zebatata says Japan has been deflated / stagnated for 30 years, so their thinking is we can use the inflation. Yeah, I mean, so to your point, here's another good point. I think you make a good point. A lot of people are like, oh, I'll just buy the market randomly and I'll just buy random stocks because the stocks are always going to go up. No. The Japanese stock market is just making it back to all-time highs, and now it's rolling over again. So nothing's a guarantee, right? And I'm sort of cutting the Japanese stock market a bad break because there's a lot of other factors that are going into it, like declining population and aging population, in which case we actually did an entire stream on how that could happen here in the United States. There's a huge fertility crisis in the United States that could lead us down the path of stagnation, GDP contraction. The same thing that's happening in Japan with an aging population. that will probably happen in the United States, unfortunately. Jay says, Tom, Bitcoin is a get-rich-quick, purely speculative, says Jay. I think a lot of the cryptos, like the alternative coins, are. I disagree with you on that piece, because I think a lot of people lump Bitcoin into all of these other schemes that are going on, like the Celsius, like the Terra Lumen, Ponzi schemes. But I definitely respect your opinion. I definitely respect it. And you could be right. There's a very good possibility you could be right. But I do have exposure, and actually, surprisingly, I actually just bought some today. Tamara, good to see you. Says the Korean currency is good. You can buy. Yeah, I guess it just depends on your currency pairs. The chat's moving a little bit too fast. I got to put on slow-mo. Hold on, let me see if I can do that right now. Hey, David C. Randall says, Tom, you either work for limited resource or unlimited resource basis. Technology created a new value system. That's a very interesting, that's a thought-provoking statement there, which I like. Nirvana fan. MB Elias is a debt and currency crisis could also be coming to Asia. Yeah, it's possible. So now that we've given our bear thesis, we've spent probably the first hour and a half of the stream on a bear thesis. It's always important. Let's say if you're like a 2 on the market, if your overall market rating is like a 2, one of my really, really good friends says you should always bump it up one notch. Always lean a teeny tiny bit bullish, because let me tell you guys something. If after the midterm elections, okay, let's fast forward a little bit. But before we fast forward, do you guys want to do one quick lap around Grand Central Station, or do you want to head back down to Penn Station? So let me know in the comments. And I think I lost my train of thought, but that's all right, because we have unlimited time here. We're just hanging out. Juniors, as you know, the chat is going strong when Tom has to actually stop to catch up. Yeah, I'm trying my best, everybody. I apologize. Penn, we're about to split 50-50. Penn Station, Grand Central, either one is fine. Wow, we're split 50-50. You know, we'll listen to Lady-O, because Lady-O's our good moderator from New Jersey. We'll listen to Lady-O. Arsenal fan, good to see you. Long time no see. Jerry's like flip a Bitcoin. That one's funny. Comic-Con Hunter says Penn. Yeah, we'll go to Penn tonight and maybe tomorrow. Well, actually, that's not true. Tomorrow we're actually going to be downtown. Tomorrow afternoon I have a meeting actually in downtown near Rector Street down there. So we might as well do a quick lap around the Mighty Bull, the stock exchange. We'll talk about that. Hey, Ali, this is technology stocks down big today. Yeah, and I think that again goes back to what we were talking about with rates, right? So I'm sure everybody already receives my newsletters, the Behind the Street newsletter. If you haven't, it's probably in your spam folder. But one of the topics we cover a lot is the impact of interest rates on very high beta, high PE growth stocks. Because in general, and we are looking at the One Vanderbilt building, but in general terms, generally speaking, what we see when interest rates go up, what happens to the valuation of growth stocks they tend to compress or go down. So why is that? Well, if we go back to like a Finance 101 class, where Bill Ackman says the number one thing about finance is discounting cash flows into the future, right? That's why if you get a job at an investment bank, maybe you're a stock analyst, the number one thing you'll probably be doing is building a lot of discounted cash flow models, right? Or DCF models. And when interest rates are extremely low, these very frothy, speculative growth stocks tend to go through many multiple expansions of price to sales, price to earnings, if they have any earnings. And the reason for this is because the vast majority of high beta tech stocks, their earnings are forecasted in the future. So the vast majority of that company's earnings are not present day earnings. They're not earning any money right now, but they're projected to earn money in the future. So when interest rates are low, the value of their future earnings are worth more in today's dollars. But as interest rates go up, the value of their future earnings in today's dollars go down. So there has to be a little bit of a re-ration here. So that's why you see a multiple compression. Does that sort of make sense? And we'll walk past the Stephen Schwarzman building. And Stephen Schwarzman made a ton of money. He made a fortune back in the day during the corporate raider days of the LBOs, or the leveraged buyout deals. Right here, Stephen Schwarzman building, beautiful New York Public Library. But that's why I think it's very important to understand in general, right? It's not all the time, but in general, interest rates have an extreme impact on the valuation metrics of equities. And that's why, think about all the stocks that are trading near all-time highs right now. So we've seen the energy sector perform really well because right now oil companies are making a lot of money. So as interest rates are going up, investors want to buy companies with earnings right now. They're no longer willing to pay a premium for future earnings. They're like, hey, interest rates are going up. I want yield now. I want to buy companies who are going to pay me a dividend. I want companies who are earning massive amounts of free cash right now. When interest rates go back down, sure, maybe I'll pile into the speculative growth stocks again. And maybe in another stream we'll cover some of the SaaS or software as a service companies that I think could be a good generational buying opportunity, assuming their earnings trajectory continues to compound at a 25% or greater compounded annualized growth rate. But that'll be for another stream. All right, so now we're at Bryant Park. And I will give you guys a view of Salesforce Tower as well as Bank of America Tower right here. So this is Bank of America Tower and Salesforce Tower. Hey D Hot says, hey Tom, I just watched the movie Wall Street. It's the same. Good to see you, D Hot. Van says, does anybody ever follow you with the notepad, wearing sunglasses and taking notes? No. But sometimes, well, I won't bring attention to it. Hey, Perry Willix is here. Good to see you. FredX is at 8.6. I think that's probably about a 9.1 view. Maybe like a 9.1. Beautiful view here. Hey, Junior's here. Welcome, Junior. This is Bryant Park, is one of my all-time favorite places. Hey, man, I love it too. Bryant Park is absolutely beautiful. If you're interested in finance and you're visiting New York City, right across the street from this building, the Stephen Schwarzman building, is the brand new New York Public Library. Now, if you go to the 5th floor, that is the International Business Center, sponsored by Bloomberg and Steven Schwartzman, I think. And you could actually use Bloomberg terminals for research purposes for free. So don't go up there trading crazy amounts of size, and don't go up there trading credit default swaps, please. Just kidding. But if you go up there, you can use the Bloomberg terminals for free, and it's a great resource. It's on the 5th floor. So if you ever come here, feel free to take advantage of that resource. London Calling says, what were you going to say that you noticed on your walks? I'm afraid I can't say. Maybe I will say in another video, but not today. But this is the Bryant Park Grill. Very beautiful on the inside and outside. You know, I think it was a really good idea for them to extend the dining area outside. It's in like this enclosed tent. It looks really nice. Kirby's status on college loan debt. So a lot of people wanted me to give my opinion on if we should cancel student debt or not. I've given my opinion on that before, but I guess I'll give it again. And it is a very controversial opinion. But I do have reasoning behind my opinion. So before the chat breathes fire on me for this opinion, hear me out. And also, I'll preface this by saying I do not have any college debt. I have 0 student loans. I think that's important when you're hearing my opinion on if we should cancel student debt. And I understand everything, but here's my position on it. Here's my position. Wait, don't hate me up for it. If I'm the President of the United States right now, if I'm Joe Biden, if I am 80 years older than I am right now, I would get up in front of the American people and I'd say, all right, pal, here's the deal. We're going to cancel all the debt, all the student loan debt, but from this day on, we are banning all government subsidies of student loans. Not happening. The colleges are going to freak out because if the government gets out of the student loan business and stops guaranteeing all these loans, well, guess what? Then nobody could afford to go to college. You'll have like 20 people going to college, and these colleges would be forced to lower their prices. Right now, you have no free market capitalism in the college market. They're actually incentivized to raise prices, colleges. They're not incentivized to lower prices, and here's why. If I walk into a loan office right now and say, hey, I want to borrow 250 grand to go to college, they don't care if I have any money, they don't care if I have any job, and they don't care if I have any assets to use as collateral for the loan. They say, sure, waltz right in here, we'll give you the loan because the government's going to guarantee it. If you default on this loan, which by the way, you're not allowed to, the government will backstop it. But now if I walk into the loan office and say, hey, I want a $250,000 loan to go to college, and the government is no longer able to guarantee that loan, they're going to say, hey kid, where's your job? Where's your credit score? What is your income? Where are your assets? And if you don't have all of that stuff for me prepared in the next 20 minutes, well, you could pound sand and take a walk. It's not happening. So that would force a cascading effect to say all these colleges would be stunned. They'd be like, oh my God, nobody could afford our prices. We'd have to lower our prices. And you'd have massive layoffs throughout administrators, the athletic departments, because what the government subsidization of student loans has made, it's made all of these colleges and universities so exploded on Wall Street, there's something called the fat, right? So as you go into recession, you trim the fat out of an organization. So at all of these universities, you have administrators, you have, athletic department where they have 20, 30 pools, and it's literally become like an adult playground college. Excuse me. But if you're not able to get a loan and pay for colleges, prices are going to have to come down. So that's what I would say. I know, very controversial, but That's my take. Hey, Miguel Gonzalez, good to see you. I gotta get some water. Lawrence says, don't cancel, have the government out of the loan business. Yeah, so here's the thing, and I get it because I was one of those kids too. I worked all the way throughout college. I get it. It's a grind. I had 2-3 jobs throughout college. I was living in a closet, saving every penny I could. And there's many people, many Americans, kids that chose to do the right thing, to go to a state school and pay their way through. I understand. But if we can really address the problem and say, look, we made a huge blunder as a nation, huge blunder. Everybody gets a pass. Let's cancel it, but then let's actually address the problem. But that will never happen, by the way. The government would never do that because there's too much, the universities would never allow it. But that's just my opinion. All right, let me read some of the comments. Latrell Miguel says, how did you maintain your grades while working 3 jobs? I didn't. I didn't. My grades were not good. Theresa says, I don't agree with your assumption. You were totally off credit score. I think you have lost it. That's okay. We could disagree. Look, I told you it's a controversial opinion, and I totally respect everybody that disagrees with it. I totally respect it, 100%. Kirby says, can we mimic the German system of higher education? Lady O says, get some water, Tom. I do need some water. The, what's it called? The pollen is really high today in Manhattan. Very, very high. Yeah, I know. L the Originals is currently paying back student loans. Yeah, so that's a good point, what Daryl just made. Daryl, that is a good point. Or David. Junior, this is Tom, you're a trooper for getting through tonight. Appreciate it. Davis is one of my favorite classes at the University of Pitt. Was a junior seminar in anthropology. The class only had like 5 students in it. Classes like that would end. Yeah, I mean, look, there has to be a give or take, right? So I remember my brother telling me a story. My brother told me, he's like, Tom, my favorite class in college is I took I'm going to butcher the pronunciation, so feel free to roast me in the comments. A sommelier class, or sommelier. How do you pronounce it? I'm not a big alcohol guy. But at his college, he had like a wine tasting class, right? So to someone's point in the chat, I don't know who said it, because I'm having a hard time seeing. But yeah, maybe classes like that would go away, but at the end of the day, some of these students are walking out of college with $250,000, $1 million in debt, and the interest is accruing and accruing and accruing, and these people are depressed. Some of them are killing themselves. It's horrible. I have friends that are so cripplingly depressed because they're like, Tom, I get my paycheck, I'll make $6,000 or $7,000, I'll be happy about it, and then I'm like, oh wait, I have to pay, $1,600, $2,000 on my student loans. So at what cost? Do we want to have the wine tasting classes? Do we want to have the basket weaving classes? Or do we want to have kids not be depressed? I don't know. It's a very touchy subject. I agree and respect everybody's opinion on it. I do. But that is if I were president, that is what I would do. I know it's a horrible call. I know my approval ratings would plummet. But look, at the end of the day, I mean, it's a tough issue. It's tough. All right, so now we're on West 36th Street. I am seeing a lot of the comments. I'm reading them in my mind. I'm just having a hard time reading them out loud. Very good comments with counterpoints to my argument. I take them into consideration. I agree with many of them. But it's a sticky situation because some people are actually physically depressed and can't get on with their lives. So you guys, if you guys have been watching the stream for a long time, which many of you have, you know that me and Senator Elizabeth Warren disagree on probably every single thing under the sun. Like literally everything. Like we are the polar opposite people. Where I do agree with her, where I would stand by Senator Elizabeth Warren and say, hey, she's totally 100% right, is when she made her point, and she actually said this on Twitter, by the way. She came out and said, people don't understand the crippling burden that student loans are putting on our young people. She said, imagine if you could remove that burden from our young people. Imagine the productivity. Imagine how like we would have a gangbusters boom in the economy of productivity. Imagine if you're a kid, you're depressed, you're not doing well at work because you're thinking, why do I have to work hard at this job? I'm just going to have this money and pay the student loans and then live paycheck to paycheck, scraping by barely off the you-know-what. What if you woke up and said, hey, listen, we made a huge mistake as a country. Your loans are forgiven. You would probably be so euphoric that you would probably create the next Microsoft or the next Tesla or something like that. I do see her argument there. So I think that's pretty much the only thing we agree on. But if that's the case, if you do cancel student loans, you got to get the government out of the student loan business. And that means you're going to have about a 5 to 10 year window of people not being able to go to college. And a lot of colleges are actually going to go bankrupt. But that's free market capitalism. And with crony capitalism, that is what you get. Yeah, Nako says, what about the people that paid back their loans? Yeah, that's the thing that sucks. That's the thing that sucks. Like you could say like a person like me, right? I didn't go to a private school. I went to John Jay College of Criminal Justice and spent $2,000 a semester because I didn't want to get myself into debt. I worked 3 jobs, I didn't have a nice apartment, and I grinded all throughout college because I didn't want to take on the burdens of debt, you know? But some of my other friends, they went to Duke and they partied, right? They went to Penn State and they partied for 4 years. And now they're saddled with student loan debt and they are miserable. But for the economic greater good, I would be willing to make that compromise only if we would totally remove the government from subsidizing any more student loans. That's the only compromise. That is what I would be willing to do. Because that would provide a lot of relief to Americans. Look, if we could spend billions of dollars, right, trillions of dollars in wars in Iraq and Afghanistan, sending billions, $80 billion to Ukraine, I think we could help out the average everyday American kid that got screwed. And many times, in many cases, they were coerced into unethical practices into getting these loans. So if we could spend trillions of dollars in Iraq and Afghanistan, blowing things up over there, if we could send $80 billion to Ukraine, I think we could help out the college kids. Again, super controversial. You guys probably hate me after this stream. But look, you guys know I shoot it straight. I don't sugarcoat anything. That's just my idea. XX's inmates get free education that Americans pay for. So XXX or XXX, when I was in college, I actually read a really, really good book by Dr. Carl Hart. And this professor, he was so brilliant, he totally changed my entire perception on 2 things. Number one, this stream is going off the rails, but I think it's good. I'm having a good time. Number one, he changed my perception on the decriminalization of hard drugs and the legalization on marijuana. I used to be the kid that is like, no, ban marijuana. If you're caught with it, throw him in jail for 20 years. This guy totally changed my perception on all that. He's such a smart guy. I think he was on the Joe Rogan podcast one time, but read his book, Dr. Carl Hart. He's actually a professor at Columbia University. Brilliant guy. He changed my whole perspective on that, and he changed my whole perspective on the prison industrial complex in the United States and how we should actually be spending more money into investing in the education for inmates so that when they come out of jail, they can be easily assimilated back into society as opposed to being outcasts. Because the vast majority of inmates that get released from prison, they actually just go right back to jail because they have no future. They can't get any jobs, they're not educated, they're angry at the world. So if instead we take a different approach and we invest into educating and retraining and retooling these people to say, look, you made a mistake, you did something bad, you're going to serve your time, but while you're here, you're not just going to sit and rot away in a cell. You're going to pick a skill that you want to learn, and this is what we're going to train you for, so when you get out of jail, you can assimilate back into society. So that could be computer science. That could be, maybe you want to learn how to be an HVAC mechanic. If we can make our prisons like little trade schools, I think that would increase productivity and it would actually alleviate stress on the government and save money over time, because the average inmate, when they get out of prison, they live off the government dole on welfare and all this stuff. But if we can actually provide them with the tools they need to do jobs when they come out of the prison, they're not only going to be productive citizens of the United States, but they're going to be taxpayers as well. So interesting thought there. So check him out, Dr. Carl Hart. I still think he teaches at Columbia. Really, really interesting guy, by the way. Really interesting guy. Hey, Lady O says, got to get up in 6 hours. Good night, Tom. I actually got to run too, everybody. I got to get up really, really early. So we'll end it on the backside of Madison Square Garden, because I got to get up really early too. I got to get up at like 6:30 in the morning. I got to be back here in Manhattan. But if you guys enjoyed the stream tonight and you want to come back tomorrow night, feel free to leave a like on the video. Subscribe to the channel if you are new. I apologize I couldn't read many of the comments tonight. I'm having an issue with my contact lenses, but I will go back and read them after the stream. Hey, Twitch ASMR says, you know how many students borrowed money and spent it on vacations, cars? Yeah, let me pay the money back. Yeah, you're right. So Twitch ASMR, again, like I said, there's going to be many, many variations that you're 100% right, and it's an issue. But that goes back to my first point. The government allowed all that stuff to happen. If the government didn't subsidize any of these student loans, these kids, these 18-year-old kids, couldn't have gotten that money to blow it on all this nonsense. But you're 100% right. I agree with what you said. It's ridiculous, but there's no easy solution to this problem. I think you're right. Kurt Flirt, good to see you. Hey, Bagels and Walks is fascinating and thought-provoking stream. Thank you, Bagels and Walks. Gregory, thank you so much. 3T3. So we're going to go on the backside of MSG. So I want to check out Billy Joel. Manuel says, telling people not to pay will make people take on more loans. Perhaps. Perhaps. Or maybe, I think if Biden was very good at persuasion, I think we need a president to get up there that's very good at persuasion. And that could set the tone in a stern way, just to provide clarity, to say, look, this is the reason why we're forgiving all this debt. But maybe you're right. I totally agree with you on the principle. Forgiving all this debt is insane. but I just don't see any way out of it, because let's run it through this way. And this is the last thing I'll say. What if we don't forgive any of the debt? The problem is just going to get even worse. There's going to be students next year that get government subsidized student loans. There's going to be students 20 years from now that get government subsidized student loans. And 50 years from now, we're not going to have just a couple $1 trillion problem. We're going to have a $50 trillion problem. So I might as well nip it in the butt while it's at least somewhat manageable. But I don't know. To your point, it's almost impossible. Hey, a different take. Good to see you, my friend. Lady Sarita, welcome. You know, I'm very surprised at the amount of people that are outside tonight. So we're on 7th Avenue and 31st Street. I think there is some sort of event, or maybe like a tourist / school vacation, something going on. Van says, hey Tom, will you be in Florida tomorrow? No, I will not be in Florida tomorrow. I'll be in Miami next week. Nakos says, big meetings in the morning, Tom. Not in the morning, but I just got to prepare some slide decks for some meetings in the afternoon. You know, I'm very surprised it didn't rain tonight. It was supposed to rain a little bit, but it didn't, which is good. Hey, Bob says Pink Moon. Hey, Tin Man is here. Good to see you. Yeah, so photos from around New York, you are right about that. You are right about that. But see, because they're not going to stop. Like, you can't just get rid of the problem and then don't get rid of the thing that causes the problem. So here we are on the very backside of Madison Square Garden here, everybody. Beautiful night. Matthias says, why do you travel between Miami and New York City so much? Because I have a lot of clients and meetings and business things like that to attend to here. So a lot of my clients are in New York City. The vast majority of them, but also there's some in Miami too. Hey, Lodi says, hey Tom, been lurking, but love that you fearlessly speak your opinion. That's why we stick around. Thank you so much. Appreciate it. Yeah, I think it's good to speak your mind, but also have respect for those who disagree. I encourage the disagreement. Yeah, Ryan Royal, Madison Square Garden is looking nice tonight. Everything is all lit up around the city. So this is 4 Penn. We're actually about to see the one and only Moynihan train station in just a little bit over here. But here we have Billy Joel. Alyssa says, can we go inside Penn Station, please? Yeah, we will. Ooh, but you know what? Every time we go in there, everything buffers. But you know what? If it buffers, that's when we'll end the stream. So I'll take you in there. I'll take you in the Moynihan train station. All right, so I'll take you guys into Penn Station. But real quick, I'll shamelessly plug the newsletter. So if you guys like the conversations that we talk about every night on the stream, every Tuesday or every other Tuesday, I will send you a free investing newsletter called Behind the Street. So if you scan the QR code, punch in your email, I will send you a newsletter about the U.S. equity markets, the U.S. housing market, fixed income, and you can stay up to date with us in the chat. So feel free to scan the QR code and sign up, and you'll have all of my equity research for 100% free. I send it out every other Tuesday. So feel free to join us over there, the Behind the Street newsletter. So a lot of the conversations that we talk about each and every night on the stream, I expand upon them in a little bit more clarity, provide infographics, and oftentimes provide very useful links. So feel free to sign up, punch in your email, and we'll see you in the Behind the Street newsletter. Hey, Andy is here from South Korea. Andy, good to see you. Andy, so one of my good friends is in Korea right now. I'm gonna pronounce the name of the city wrong, but they're on, is it called Jeju Island or something? Jeju Island? Jeju Island? Hey, Marcelo Gill says, good night, Tom. Your newsletters are very useful. Thank you. Appreciate that. Thank you for reading. And if you find them insightful, feel free to forward the email and the newsletter to a friend or a colleague. It will definitely help the channel and the stream grow. A free way to support the channel. Yeah, but Andy, I think it was called Jeju Island. Yeah. That's what it's called. It's supposedly absolutely beautiful there, by the way. So here we are outside of the one and only Moynihan train station, where I will take you guys inside. Andy says, yes, Tom, do you mean Jeju Island? Yes, I do mean Jeju Island. Apologize for the mispronunciation. But yeah, supposedly it's absolutely beautiful. There's beaches there. Vance says, hey, Tom, what'd you have for breakfast? I didn't have anything for breakfast today. So I'll take you guys inside. This is actually the post office. We have to be quiet while we're in here. All right, everybody, you guys ready? All right, here we are. Beautiful architecture in here. I know, LV Original. Isn't it quiet in here? It's like such a crazy contrast from outside. Somebody says, can we zoom in? Sure. Hey, Miss Brown Eyes, good to see you. The center of the ceiling, yes. Give me 1 second. Yeah, Elle, this is the post office. Hey, British Grey, good to see you. Sally's here, welcome. Oops. Yeah, MBA Elias. Perfect for a movie location. Agreed. Yeah, out and about, so you could hear a pin drop in here. You really could. So imagine way back in the day, every single one of these windows was in operation. And now, obviously, nobody really mails anything. So during the day, there's really only one window. Matthias says, will you stream Lower Manhattan? We will. Maybe tomorrow. Oops, I think my sorry. And then right out here, you can see Madison Square Garden. Elle says, is the train station closed? No, it's not closed. It's going to be right around the corner here. But I think the internet connection is not so good. But we'll try it. We'll try it. So let me know in the chat if you are noticing any glitching. Hey, Mechi A says, hey, Tom from Buenos Aires, Argentina. Good to see you. Hope you're well. Yeah, these have to be definitely soundproofed windows and doors for sure. So now we are headed from the post office to the train hall, and you guys will be able to see it. Yeah, Elle says, hey Tom, I always come here when I go to New York City, but didn't know there's a post office. Yeah, Elle, if you go to the second floor and walk all the way back, you'll see the opening. So a huge contrast here from in there to overlooking here, beautiful Moynihan train station. And the interesting thing about this train station is that you'll notice during rush hour there'll be so many people standing here, but whenever they have their tracks called, you'll see everybody sort of rush underground. It's sort of funny. It's like watching ants go back into their ant colony. And all the tracks are actually underground here. Here, I'll show you what it looks like. And this is where I go home. I think they did a fantastic job. I think they did a fantastic job with this. But everybody, we will end it here. So I want to thank everybody for joining the stream tonight. I had a blast. Thank each and every one of you for coming. I really, really do appreciate it. We go live every single day, well, 5 days a week, at 8:30 p.m. Eastern Standard Time. So please join us tomorrow, 8:30 p.m. Eastern Standard Time from the greatest city on earth, New York, as we explore the financial markets while we're exploring New York City. So Wendy England, thank you so much. Andy, thank you so much. Feel free to like the video, subscribe, please, to the channel if you are new. And to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere. You just need to know where to look. See everybody right back here, 8:30 Eastern Standard Time tomorrow.